Follow the money. It's that simple. And this is the reason why it's so important to understand where money is going, especially in the under market activity. So let's take a look here at the case study that I have for you. This is Maxim Integrated Products. Now, this is a specific case study because I want to show exactly why under market activity is important and has been so important to my success over the last 15 years. Every time we talk, what do I say? Where is the puck going to go? That's what we have to anticipate. And here, the puck's going to go nowhere because this is a announced buyout takeover here. But we had a gap here from July 10th that prices moved all the way up to $73 on July 13th. So over the weekend, there was a news that came out, and Monday morning shares reacted. Well, that news was that there was a merger that was going to happen in the space. The Maxim Integrated was going to get taken over for a third higher than what it's trading at, or the market value here, and prices gapped higher on that news, and so be it. Now, the news came out. What do you do here? Well, there's nothing to do here, and that's why it's important to understand and get positioned ahead of that news. So let's just take a look back at the Analyze tab here, and let's go all the way back to the 8th, July 8th. So that is a Wednesday. Yep, that is a Wednesday. And what do we see here? These are good examples to understand in case studies to understand, because not is it just looking back, but it's understanding how markets work, how money works, and understanding when that next situation has happened, which I've seen this scenario play out over and over and over again. So what we're seeing here is that we have 8,400 contracts that traded in volume here. Now, again, as I often say, doesn't mean they're bought, doesn't mean they're sold. There's 8,000 contracts. That's where the missing ingredients in understanding what's going on here. So we do know that these were opened. These were bought, and this hit our system. The interesting thing, again, breaking this down, is money is betting right now. Money's coming in. People are putting 8,400 contracts traded, and they were bought, and somebody's making a directional bet because they bought calls that it's a 65 straight here in July, and they expire at that time 9 days. 9 days, all or nothing bet. That's it. It's a sure bet, all or nothing, because they're not going to stop out here. So when we have this and we see this, this is interesting. This is interesting. It's unusual, but unusual doesn't really mean too much, because what's interesting about it? This is interesting. All or nothing, 9 days, $65, all or nothing. Well, hey, I want to know what's going on there. I want to know why this position is being put on here. What's going on? Why is someone putting money where in 9 days they have to make this big substantial directional bet, putting all this money on the line, and they're going to lose it? They're not going to stop out. The people who put money, institutions don't stop out of options. Stopping out of options is a losing way to never be consistent in the financial markets. We'll talk about that in another video, another day. But again, 8,000 contracts traded here, 9 days. Now, it's interesting. What's going on here? Okay, so the next day, what happens? Well, they come back-to-back days, back-to-back days. This is that other ingredient, the next step. That's why it's important to understand previous activity and what's going on that current day, where I talk about under market activity and that positioning. Now there's 8 days, and there's more money coming in here. More days, less days to expiration, and more money coming in. Now, these contracts did increase from that day, from a previous day. Shares were up $2.39. Yeah, you know, this is a semiconductor name. The overall sector's up. So, you know, when you look at it that way, maybe not too much. Maybe a directional bet. Again, when we look at the charts here, going back to the charts, we get that spike up higher here, and then we get a pause. Again, you know, it's at these recent highs here. You know, we don't really know what's going on here, but what we do know is that somebody is positioning themselves for prices to go $65. And that, at that time, was trading about $62. So, hey, you know, it's not a crazy bullish bet, but it's a substantial bullish bet, because if we go back here to that on July 8th here, the probability of in the money expiring $65 is about 25%. I mean, that means a 75% chance that prices don't close at $65. And you're putting a big substantial, buying a lot of premium, a substantial size bet here, plays out in 9 days. And then somebody comes back the next day and places the same trade and they buy the options higher. So then we look on Friday's activity and they're already positioned here. So we know that these contracts have been opened because what we're seeing here is that the positioning that these contracts are being opened and they're adding to the open interest. So someone is in place. They got their bet in. It's just interesting as well because I've been quoted on many times for finding this specific type of activity, especially going into a weekend and we see positioning into a weekend. And right now there's 7 days to expiration, which a couple of those days are weekends. So they're going to have time decay. So really they have from this positioning, they have this following week, which is this current week, for something to really pan out. And it has to pan out in a short amount of time because these options decay at a rapid pace. Now these people are in position, they have their position, they bought what they needed to. Now they're just waiting for something to move shares higher. What that could be, just normal buying or some kind of news. Well, fast forward coming into Monday morning, as we already know, prices, they closed at 5.20%. So they're up about 8% for the day. And if we just take a look at those contracts and see how those traded, positioning here, positioning there, coming in, and then all of a sudden those that are trading about $1 spike all the way up on that session in the morning, all the way to $8. So we're talking about an 800% increase in just a matter of hours. They were in position, they got their positioning in options, not stock. Options, why? Because it's under market activity. They're able to navigate the options market without moving the overall equity market, being in position. Once that news comes out, bang, prices go higher. That's where those big returns come. And that's where you want to be before that bang happens. So looking at this, I mean, this is incredible. And these are the types of opportunities that I provide in my service. And it's something that you're still able to get in on. We've just closed 8 out of 9 winning trades. And we are always on top of trades like this. So this may have happened, but it's going to happen again. And we see it very often that this type of positioning, people get in. Is it inside information? I don't know. Is it a little birdie told them? You know, that doesn't really matter. This is all public information. After a trade is executed, it's public. We just want to know where money's going because that means someone's risking, especially that amount of money. The only way you make money in the financial markets is if you are right and you make money. And that's what's really important. That's why this is the most and is the real-time and only real-time indicator that shows you where prices are going to go. That's why it's important to know where the puck is. That's why it's important to understand under market activity.